Hello everyone, welcome back to this week's Technical Insights. Global equity markets ended the second week of September, posting their strongest weekly gains of 2024 ahead of the upcoming Federal Reserve meeting on the 18th of September. Investors returned to scoop up shares of megatech stocks and semiconductor names, which helped drive last week's rebound rally after the big tech recent underperformance. Economic data reflecting a moderation in inflation also seems to support the case for a rate cut. Last Wednesday, the Consumer Price Index in August came in at 2.5% on an annualized basis, the lowest level since February of 2021. Wholesale prices meanwhile rose 0.2% in August, coming in line with market expectations. On Friday, the 30 stocks Dow Jones Index jumped 297 points or 0.72% to close at 41,393 points. Broad Index S&P 500 climbed 30 points or 0.54% to finish at 5,626 points, while tech-heavy Nasdaq Composite Index added 114 points or 0.65% to end at 17,683 points, regaining the 17,000 handle and is now just less than 6% of its record close on the 11th of July at 18,671 points. For the week, the Dow advanced more than 1,048 points or 2.6% and is now less than 0.5% away from its all-time high on the 30th of August at 41,585 points. The S&P 500 rose 217 points or 4.02% for the week, recovering much of last week's 4.25% losses and is now less than 1% away from its all-time high on 16 July at 5,669 points. The Nasdaq Composite Index gained 993 points or 5.95% for the week for its best week this year and is now less than 6% away from its all-time high on 11th of July at 18,671 points. Powerhouse chipmaker, Supermicro Computer, and ARM Holdings added 3.4% and 5.9% respectively on Friday. Google parent Alphabet advanced 1.8% and Uber jumped more than 6% as well. As investors prepare for the upcoming US Fed meeting, the main topic for discussion will be whether the US Central Bank will opt for a 25 basis point or a more aggressive 50 basis point interest rate cut. And the answer could hinge on one key economic indicator, which is US retail sales data out on Wednesday, 17th of September. In Asia, Hong Kong stock rose to a one-week high following speculation that China may cut mortgage rates as early as this month. The Hangseng Index rose 0.75% or 128 points to close Friday's session at 17,369 points. The Hang Seng Tech Index added 0.13% or just 4 points to close at 3,479 points. Despite Friday's gain, Hong Kong Benchmark Index still lost 0.43% last week on top of a 3% retreat from the preceding week, while the Hang Seng Tech Index managed to narrow last week's losses to 0.23%. Food delivery platform like Meituan added 0.6% to Hong Kong dollars $123. Smartphone maker Xiaomi added 1.6% to Hong Kong dollars $19.22. And insurers Ping An jumped 1.4% to Hong Kong dollars $35.35, leading the gains among the index heavyweights. Bloomberg reported on Friday, citing unnamed sources, that China could cut outstanding mortgages by up to 50 basis points as early as this month to lower borrowing costs and spur consumption. Sentiment received another boost after Bank of America backed Chinese equity markets, saying that the yields are again at an attractive level after the recent pullback. Concerns about China's economic recovery outweigh optimism of an imminent rate cut, as markets still need to see fundamentals turn the corner to continue the rally. Solid fundamentals would be a prerequisite for Chinese equity to continue their rebound thus far. Back to Singapore, our Singapore Straits Times Index was up about 6 points or 0.17% last Friday to 3,562 points. We managed to score another year-to-date high on Friday at 3,572 points, and this is STI's fifth straight winning session. For the trading week, we are up more than 108 points or 3.13% for the fifth consecutive winning week, building on the 0.34% gain that we saw last week. Year-to-date, our benchmark index is up 10% in 2024 and on track for its best year since 2017. Singapore stocks overall are now at a 6-year high, as our strong economic outlook boosted investor sentiment, while other Asian markets were also upbeat after encouraging US data last week. And with the interest rate cuts on the horizon, Singapore property counters and S-REIT are likely to benefit with lower borrowing costs and higher property valuations. Some of these benefits are already getting priced in, with the SIAS Index widely regarded as the benchmark of S-REIT gaining over 4% in the past 1 month. Offshore service provider Dynamac Holding was also among the heavily traded stocks on Friday. A unit of South Korea Hanwha Corp has made an offer to buy the shares of Dynamac it does not already own for 60 cents apiece. Dynamac shares closed at 63 cents last Friday, up 1.61% or 1 cent after the announcement. Maybank and OCBC Bank analysts have recommended that shareholders should reject the offer as they said the price undervalues the stocks. The top gainer on the STI Index last Friday was YangZiJiang Shipbuilding, which added 8 cents or 3.2% to close at $2.56. The company announced that it is in the process of acquiring a 34% stake in Chinese shipbuilder Nashi Group Zhoushan Shipbuilding. Local broker CGS International has an ad call on YangZiJiang with a target price of $3.20. So for this week's technical analysis, let's look at shipbuilder YangZiJiang Shipbuilding. Last Friday, YangZiJiang Shipbuilding share price rose 8 cents or 3.2% to $2.56. The main board-listed shipbuilder said that it's acquiring a 34% stake in Nashi Group Zhoushan Shipbuilding, a wholly owned subsidiary of Japanese shipyard Nashi Group. The consideration is set at 833 million yuan, which will be wholly satisfied in cash. I think that this joint venture is a significant step in strengthening and bringing together the expertise and capabilities of both companies in the research and development of shipbuilding and supply chain. The joint venture will advance the latest shipbuilding technology, enhance efficiency, and achieve greater results for both entities. The two companies have already collaborated in various areas of shipbuilding through their joint venture in Jiangsu, Yangzi Mitsui Shipbuilding. Upon completion of the share allotment, Nashi Group Zhoushan Shipbuilding will become an associated company of YangZiJiang, further deepening their partnership. The previous time that we covered YangZiJiang Shipbuilding was on the 12th of August video. You can click on the link around this video to rewatch it on our YouTube channel. We noted that YangZiJiang Shipbuilding order wins signal strong revenue stream and their order momentum is likely to continue into FY 2028. The shipbuilding first quarter update also showed a robust order book with year-to-date wins of US $3.32 billion against the company's 2024 target of US $4.5 billion. Most analysts noted that the stock continues to offer healthy upside from the current levels, riding on the industry upcycle. Average analyst 12-month target price for YangZiJiang Shipbuilding is $2.64, with the maximum estimate coming in at $2.84. We concluded that the then 20 days and 50 days moving average then at $2.43 and $2.41 respectively were support and accumulation levels, with the target price on the 31st July high at $2.75. Last Wednesday, on the 11th of September over here, the opportunity came when YangZiJiang Shipbuilding share price hit a low of $2.42, testing the 50 days moving average in blue at $2.47 and the lower bound of the Bollinger Band in white at $2.43. The stock subsequently rebounded to Friday's closing price of $2.56. Looking at the indicators, the MACD indicator showed that the downtrend since the middle of August is subsiding with a lower negative MACD reading. We also observed the converging of the MACD line towards the signal line. If a crossover happens, it may confirm a start of a new uptrend. On the RSI, the latest reading at 54 is above the 14 days RSI moving average of 51 and above the 50-point baseline. This positive reading indicates that there's at least some positive momentum in YangZiJiang share price now. So with both the MACD indicator confirming that the downtrend momentum is subsiding and the RSI indicating that uptrend momentum is starting to build up, we continue to reiterate that the 50 days moving average, which is in blue now, at the level of $2.47 and the low bound of the Bollinger Band at $2.43 continue to be good levels for accumulation on YangZiJiang share price. And that brings us to the end of this week's updates. We noted your comments on YouTube on the previous week video and look forward to share more of such content with you. So if you do find this information useful, do remember to like, share and subscribe and stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.